Welcome to Recording Transactions. By the end of this applet, you should be able to record basic transactions for a business using the accounting equation as the foundation. Now that you've memorized the short definitions for key accounting terms and you know the accounting equation, you are ready to start doing accounting by recording transactions. We will continue to use a lawn care business as an example, but we will assume that it is a brand new business just starting up. Kevin Lee started an organic lawn care business on April 1st, 2013 by investing $10,000 of his personal money in Grow Green Inc. Two other people invested $10,000 each for a total investment of $30,000. Kevin and the other two investors received shares of Grow Green Inc. stock. This is a transaction that affects Grow Green's accounting equation, so we must record it. Here's how. We'll start with the accounting equation and spread it out so that we can subdivide each of the pieces of the equation into accounts. We've included accounts that a typical lawn care business might use. The things the business might own are cash, accounts receivable, equipment, and a truck. And the business might owe suppliers or the bank. For now, we only have one contributed capital account, common stock. We have two revenue accounts, service revenue and interest income. We have two expense accounts, salary expense and gasoline expense. And we have one dividend account called simply dividends. Keep in mind that stockholders' equity will be increased by contributed capital, that is, investments by owners, and by earnings, and will be decreased by expenses and dividends, or withdrawals by owners. This is reflected in the math operators shown here. Stockholders' equity is contributed capital plus revenues minus expenses minus dividends. All of our accounts, in fact the whole accounting equation, starts with zeros when a new business opens. Next, we'll provide a brief description of the transaction. Grow Green received cash from owners and issued shares of its stock. Then we have to decide what parts of the equation are affected by the transaction. Keep in mind that this is an equation and that you must always keep it in balance. This means that at least how many accounts must be affected by each transaction? 2. Can you pick one of the accounts affected when Grow Green Inc. received cash from owners? Cash. Did Grow Green's cash increase or decrease with this transaction? Grow Green's cash increased, so we'll enter the $30,000 as a positive amount in the cash column. And the second account affected? Since Grow Green issued shares of its stock, the common stock account is affected. Common stock is a contributed capital account. We use contributed capital accounts when we have investments from owners. Since investments by owners increased from 0 to $30,000, we'll enter the $30,000 as a positive amount in the common stock column. Now we need to calculate our account balances. We started with 0 cash and added $30,000, so our new cash balance is $30,000, and the same with common stock. And now a very important step. Make sure that the left side of the accounting equation equals the right side. Our assets add up to $30,000 on the left side of the equal sign, and our liabilities plus stockholders' equity add up to $30,000 on the right side of the equal sign. So the accounting equation is in balance. Next, Grow Green buys lawn care equipment for $2,000 and pays cash. How does this transaction affect the accounting equation? Specifically, what accounts are affected? Grow Green's equipment increases, and Grow Green's cash decreases. Since cash is decreasing, we'll enter the $2,000 as a negative amount. Instead of using a minus sign to indicate a negative number, accountants use parentheses so that it's easier to spot the negative amounts. Since Grow Green bought equipment, its equipment increased, so we'll enter a positive $2,000 in the equipment column. It's okay that both accounts affected are on the same side of the equal sign in the accounting equation, as long as the equation stays in balance. Again, we have to calculate our new account balances. Before this transaction, Grow Green had $30,000 in cash. Then this transaction caused cash to decrease by $2,000, so the new cash balance is $28,000. Before this transaction, Grow Green's equipment balance was zero, and now it is increased by $2,000, so the new equipment balance is $2,000. The common stock balance did not change with this transaction. It is still $30,000. And the important next step, make sure that the accounting equation is still in balance, that the total on the left side of the equal sign equals the total on the right. Assets still equal $30,000, although the types of assets have changed. And liabilities plus stockholders' equity still equals $30,000 on the right side of the equal sign. The accounting equation is in balance. Next, Grow Green buys a truck for $40,000 by signing a note. What accounts are affected by this transaction? Truck and note payable. Remember that a note payable is an amount Grow Green owes. Since before this transaction, Grow Green had no truck, and now it does, the truck account is increased, so we'll enter the $40,000 as a positive amount in the truck column. Before this transaction, Grow Green owed nothing, and now it owes $40,000, so its liability just increased, and we'll enter the $40,000 as a positive amount in the note payable column. Then we'll calculate the account balances. The only balances that have changed are truck and note payable. And we'll verify that the accounting equation is still in balance. Assets now total $70,000, and liabilities $40,000 plus stockholders' equity $30,000 equals $70,000 on the right side of the equal sign. The equation is in balance. In transaction 4, Grow Green receives $7,000 cash from customers for services provided, for example, for lawns mowed. The two accounts affected by this transaction are cash and service revenue. Remember that revenue means earnings, and Grow Green earned as soon as it mowed. Cash is increasing, so we'll enter the $7,000 as a positive amount in the cash column. Grow Green's earnings just increased as well, so we'll enter the $7,000 as a positive amount in the service revenue column. The balance in cash is now $35,000, and the balance in service revenue is now $7,000. The rest of the balances remain unchanged. The total on the left side of the equal sign is $77,000. The total on the right side of the equal sign, $40,000 plus $30,000 plus $7,000, is $77,000. The equation is in balance. The next thing Grow Green does is provide services on account. This means that Grow Green mowed some lawns, but instead of getting paid in cash, the customers charged the $3,000. This means that Grow Green has the right to receive the $3,000. So what two accounts are affected? Service revenue, because Grow Green earned, and accounts receivable, because Grow Green has the legal right to receive the $3,000. Grow Green's right to receive went from 0 to $3,000. It increased, so we'll enter a positive $3,000 in accounts receivable. Grow Green's earnings just increased as well, so the $3,000 in the service revenue column is also a positive number. The new balance in accounts receivable is $3,000. The new balance in service revenue is $10,000, and the other balances remain unchanged. The asset balances on the left side of the equal sign add up to $80,000, and on the right side of the equal sign, $40,000 plus $30,000 plus $10,000 is $80,000. The equation is in balance. Grow Green's sixth transaction is to pay employee salaries of $1,000. What accounts are affected? Cash and salary expense. Grow Green's cash is decreasing when salaries are paid, so the $1,000 is entered as a negative amount in the cash column. Which way did Grow Green's expense, its cost of doing business, just go? Up. In fact, you'll find that with few exceptions, expenses always increase. So the entry in the salary expense column is a positive amount. So the new cash balance is $34,000 and the new salary expense balance is $1,000, and the rest of the balances are unchanged. Think we kept the equation in balance? Let's check. Assets add up to $79,000 on the left side of the equal sign. On the right side of the equal sign, we add $40,000 of liabilities to stockholders' equity. But remember that stockholders' equity is contributed capital of $30,000 plus revenues, $10,000, minus expenses of $1,000. So stockholders' equity is $39,000. Add $40,000 of liabilities, and we get a total of $79,000 on the right side of the equal sign. The equation is in balance. We'll record 10 transactions in all, so 4 more to go. In transaction 7, Grow Green pays down $4,000 on the note that it signed in transaction 3 when it bought the truck. The 2 accounts affected are cash and note payable. The truck account is not affected because Grow Green does not have any more or any fewer trucks now than it did before this transaction. Cash is going out, so the $4,000 is a negative number in the cash column. And which way is the note payable going? Is the amount that Grow Green owes immediately after this transaction more or less than it was before the transaction? It's less. Grow Green now owes less, so the note payable decreased. We'll enter the $4,000 as a negative amount in the note payable column. The new cash balance is $30,000. The new note payable balance is $36,000, and the other balances are unchanged. Total assets, the left side of the equal sign, are $75,000, and on the right side of the equal sign, liabilities are $35,000, and stockholders' equity is $39,000 for a total of $75,000. The equation is in balance. Transaction 8. Grow Green received cash, $3,000, from the customer in transaction 5. This was the customer who didn't pay when the lawns were mowed, but charged it instead. Grow Green is getting cash, so cash is one of the accounts affected. And the other account? Accounts receivable. As soon as Grow Green receives the cash, its right to receive decreases. Cash is increasing, so the $3,000 is entered as a positive amount in the cash column. Accounts receivable is decreasing, so the amount is entered as a negative. The new cash balance is $33,000. The new accounts receivable balance is 0, and the other balances are unchanged. Total on the left side of the equal sign is $75,000. Total liabilities of $36,000 plus stockholders' equity of $39,000 equals $75,000 on the right. The equation is in balance. Now Grow Green buys a week's worth of gasoline on account. This time it is Grow Green that's doing the charging, not paying cash at the time of purchase. The 2 accounts affected are accounts payable because Grow Green now owes a supplier, and gasoline expense. Gasoline expense, like all expenses, is increasing, so gets a positive $500. Accounts payable, Grow Green's debt, is also increasing, so the $500 is entered in accounts payable as a positive amount. The new balance in accounts payable is $500, as is the new balance in gasoline expense, and the other balances remain unchanged. The total on the left side of the equal sign is $75,000. On the right side, liabilities total $36,500, and stockholders' equity is contributed capital of $30,000 plus revenues $10,000 minus expenses $1,000 and $500, or $1,500, so stockholders' equity equals $38,500. Liabilities of $36,500 plus stockholders' equity, $38,500, equals $75,000 on the right side of the equal sign. The equation is in balance. The last transaction is a dividend that has been declared and paid by Grow Green to its owners or stockholders. One of the accounts affected is cash. Grow Green is paying cash to its owners. The second account affected is dividends, because when Grow Green sends cash to its owners, the owners are essentially taking cash out of the business for personal use. This is a withdrawal by owners, so we use the dividends account. Grow Green's cash is decreasing, so the $1,500 is a negative in the cash column. Dividends just went from 0 to $1,500, that is increased, so gets a positive $1,500. Dividends behave like expenses, always increasing. The new cash balance is $31,500. The new dividends account balance is $1,500, and the rest of the balances are unchanged. Total assets are $73,500. On the right side of the equation, liabilities are still $36,500, and stockholders' equity is contributed capital of $30,000 plus revenues $10,000 minus expenses $1,500 minus dividends $1,500 for a total stockholders' equity of $37,000. Liabilities of $36,500 plus stockholders' equity $37,000 equals $73,500 on the right side of the equal sign, so the accounting equation is still in balance. This concludes the ACLET record transactions.